We are go live. All right. I think we are live. All right, looks like it. Let me grab a couple things. Oh, did I turn? All right. Can you hear me this time? I had everything turned off for a minute. Looks like we should be able to. Boom. All right. Hey guys, how's everybody doing? Okay, cool. Audio is good. So a couple housekeeping things just to get out of the way. So if you didn't see it, I do have my CPA coming. It won't be this coming weekend. It'll be the one after that. So March 13th, I believe, is the date. March 13th. So I made just a little spot in case you guys have tax specific questions, and just a place to post them, because I did one original video just asking for it, but that'll kind of be a secondary place. I made up a video yesterday, I think it was yesterday morning too, just about tax trader status. So that'll be kind of a big deal when we actually have her on, because that's a whole topic that'll take up quite a bit. So that'd tell you whether or not those are the main criteria for you to qualify as a trader for tax purposes. So there was some pretty easy golden rules, but if you make 5 trades a year with $500, it doesn't count. So that time Tesla dipped after the split, were you in the money for a couple months, but you rolled out? Yeah, I was. I rolled out a bunch, and then some I waited too long to do before there wasn't enough extrinsic value for me to roll it out. And then, so those are the ones I actually got called on, some of them, or exercised. And I was like, that's where I learned my lesson, like just roll them out earlier, because I was like, oh, it should be pretty close, but obviously it dipped a lot harder than anyone would have imagined. So, but yeah, that was at that point. So yesterday I was talking about Lucid a little bit, and just speaking of EV manufacturers, and I realized, well, one, I was really bullish on it just because I liked the fact that they were going after a niche that I thought Tesla has not done as well as the other manufacturers, which is like the luxury space. And I know S is supposed to be luxury. I've driven in them, but they don't feel like Mercedes or Lexus or anything else that I've been in. So I was looking into those guys a little bit. So I'll get you guys all these questions, but I thought this was pretty interesting, and I had made a couple notes too. Let me grab those. So I'm sure you guys have all been watching CCIV, and a lot of you guys hold it. But what I noticed, there was a little clip, and this was like, let me see, what day was this? February 16th. So that was like a week right before the merger with CCIV and Lucid, and they said that they were supposed to have 6,000 to 7,000 deliveries in 2021. They're supposed to be starting production this year, and then as soon as they came out, like as soon as it merged, I feel like it was it was like an hour after the merger was finalized, and then they came out with these new production numbers of, like, I don't even know where the first one was, but basically it's like, oh, it was under another chart. It was, now they're supposed to do 577 vehicles like this year, and then 20,000 next year. And that's, or no, this is, sorry, this is the volume. Where's the, I know the numbers were, the actual delivery numbers I think were pretty close. Oh no, I'm not going to be able to find it. Yeah, I can't remember. The number somewhere I saw it was 571. Oh, maybe that's revenue. And then 20,000 totally next year, which is basically only a little bit more than they were planning on doing this first year, so they pushed everything back. I don't know if you guys knew that's why everything dropped so much. And the more I look into it, and the more I think about where this company fits, it's it doesn't have that great of a niche compared to what I was thinking. I don't know how many people are going to want these instead of Mercedes, so I've kind of flip-flopped on my Lucid Air position here. I just don't see a huge market for $160,000 vehicles, take enough chunk away from the big auto manufacturers who are working on their own. And the fact 2 days after they merged, they like flip-flopped and said that production was going to be out a whole nother year. Like, very convenient. It was right after they merged, and I'm wondering why. A couple days before, obviously, CCIV did their due diligence if they were going to push out production. I don't think they made that decision an hour after the merger. It was pretty ridiculous. So I'm not getting a full Nikola vibe from these guys, but definitely a little suspect. Can you explain more about paying the dividends? What do you want to know about dividends? Dividends are super simple. So most of the time, like 99% of the time, a dividend is going to come from a company that is kind of at that, they're done growing for the most part, and the cash cannot be used to like buy new equipment or expand. So then they pay shareholders out a certain amount per month. The type of company it is, and I guess a few other factors, but kind of that tells you what percentage you get. So you can look under, let's see, let's just look on Robinhood. But basically they just pay you for holding the shares. Let's see, let's check out some AT&T. Oh my gosh, that's way too zoomed in. So like AT&T, for holding this stock, you get, and of course I don't use this platform much. Where is their dividend percentage? That's so strange that it doesn't no, contracts. I know on the mobile app you can see it really well. Just look at the stock, you'll see a percentage, and AT&T somewhere around 7%. Depending on the company, every single one's different. They are, oops, they're going to pay out a different amount, and some of them pay in different frequencies. So like O, I believe, pays once a month. AT&T pays quarterly. There's some that'll pay annually. They all have different schedules. So that's more of like an income thing. So like AT&T, I've had it for a year. I don't expect the actual stock to go up or down very much, but what it does is it pays a consistent 7%, which is definitely better than any checking or savings account you can get. Oh, you heard you can pay the dividends? Well, you can if you're forced to. It just depends like where you're at in your transaction, and the only time you have to worry about it is going to be where the share price is within range of whatever the dividend is. It's just not very often. Like for example, somebody sees that the difference between the stock and the dividend, they can pay for it, and that would be a reason to get executed on it. And you lose out on your dividends if you're holding the stock. Just depends if you're doing a stock covered call or not. So what happens when you get exercised in the money? So when you get exercised in the money, you sold the put, so you agreed to buy it at that price. So basically what my account showed is for every put credit spread I had that was exercised, I was forced to purchase shares. So let's say the spread was a 500 for 495. So I was responsible for that difference. So the one I was executed on, the one that I sold, the higher one, I'm forced to buy it. And then the one that I bought, which is my protection underneath of that, that means I'm allowed to sell at that price. So when the stock's down at 450, I get executed. The brokerage automatically takes care of the rest. And I was forced to buy those shares or sell those shares, but I had to buy them at the cheaper price. So it executes them so I can buy them, and then they can be sold. The problem that I'm sure you guys all heard of, that guy who thought he owed millions of dollars, is basically like one side got executed, and then the price dropped a whole, or let's see, the price, if it went against them, the price moved after hours anyways. So the brokerage couldn't execute the price that they should have been able to be bought at. And then they were forced to do it in after hours or settle it Monday. Hey Jacob, how close to the strike price till you look to roll out? Anytime I'm uncomfortable. So if it's like a temporary bump and I'm still ways out, I'm not worried so much. But anything like, just because everything's been on like a steady downtrend, or at least like over the overall month for Tesla has been on a downtrend. So that, because it's moving down, is more scary to me than like a sudden drop like that 620 drop we had. Was actually not as worrisome, because those are usually an overreaction. And it usually bounces back. So it depends just like what the news is. Like right now, because the overall market is in decline, and basically like, I mean, Tesla's totally moving with it. It's, I don't know if you can see this one. Does it keep everything? Get rid of news. But the purple line is the S&P, and it's just like almost perfectly falling. I didn't even know what I wanted to unplug for a little bit yesterday, but that last little dip, not on this, but on SPY, I didn't even see what that was. I saw Apple. Apple just like fell off too, that weird little dealio, or if it was just some things being reconciled before the weekend. Currently in the money for 680, 312s. Yeah, I know that's like super tough. 680 is like really hard right now, because it looks like it may have found some bottom, but like me, yeah, I'd be looking to roll those down and out. Yeah, I lost the entire collateral when I got executed, but there was some that I had basically left behind and wasn't able to roll out. I don't know whether or not it was just in time, or if I just like let the extrinsic value go too low to be worth it, or if I was just like head in the sand and going, okay, hopefully it bounces, hopefully it bounces. I think that's more what it was just hoping to get a bounce, and which changed my mind about rolling things out. Everything I rolled out ended up fine, even though I had to roll them out quite a ways, and that's why you see a really even in my account and then a spike up. So that's what I chose to do this day, or this time. Like when things have been dropping, I don't care. I'll just roll them out. They can be rolled out 3 months, 6 months, 9 months. Doesn't really matter to me. Overall in the long term, even though there's a rotation here, it'll go back up. They're just super increasing their production all the time. So I'm fairly new at option. What's the best course to take in a call that's 3 months out when the option price drops by 30? So you bought a call and you're down 30%. Well, it depends on what your thesis was. Like, did you buy it because somebody said to buy it? Is this in a company that you believe was going to hit something for some reason, or did you buy it because stocks go up? But yeah, it depends like what the case is. If something about the company fundamentally changed that is no longer leading you to think that it's going to hit a certain dollar amount in a certain amount of time. MSOS, I don't even know what that is. But if nothing has changed, then hold on to it. If you still believe that it's going where it is, where you thought when you bought it. Oh, it's a weed one. This is, I honestly don't even know what to do with the weed ones. Well, what's your strike price on it? 3 months out is quite a while. I honestly don't know enough about that. I don't know much at all about the weed stocks. I have one. That's it that I bought like way before all this stuff came out, and it's basically, it was based on a business model. I just really didn't understand how, like, has the weed market, this is like betting on it tripling over the last year, and I don't know. Is our new president gonna legalize it all over the place, and all of a sudden is weed is 3 times as valuable, or is there like one company that's doing it better? So I don't know. Yeah, it depends. Like, do you still think it's going to hit? I mean, 55 isn't too bad though. I mean, it's kind of at a point now. I guess it's either gonna bounce back up or not have any reaction. But I honestly, if I didn't think the same, I would just sell it and I'd be done with it. But if you still believe in it, hold it. I mean, that's what it's there for. And hopefully it's not a large, I don't know what they cost, but it's not like a large dollar amount. That's kind of just like a YOLO play, just buying calls, unless you really had a thesis about it, which I don't mind as long as it's small relative to the account size. I do some YOLOs. Oh, but it shook me on the option price. Oh. Yeah, if your thesis is still the same, as a matter of fact, like if it was the same and you see something, like you've done your analysis, your due diligence, whatever, if it like fell down, it seems like I would double down if it's something I believed in, but completely up to you. Do I ever set a stop loss on my short puts or credit spreads? Nope, never have. No, I take that back. I've only set a maximum profit that on Tastyworks you can set it by profit percentage. So like I'd set it to like 80% and then it automatically closed it. But I don't want to, nope, no stop losses. I just roll them. And besides those ones that I let get exercised on me, ever since then, none. I just keep rolling them out. And my like naked YOLO calls, I just don't care. I'm putting in that like a amount I'm willing to lose, and I'll just do it by hand. Are you more likely to get exercised when it's closer to expiration? Yeah, because that way that option still has so much extrinsic value before it gets closed. So you're like, yeah, if you're seeing something that might expire the next day and it's maybe ex-dividend, the date that you have to own the stock by in order to get a dividend, yeah, you could definitely be exercised. I only got exercised like when it was done, basically, with the Tesla ones, and the and even looking back there, I don't know why I didn't roll them. I could have rolled them for like a few bucks, but anyways, lesson learned. And then the other one I got exercised on was a McDonald's, and I was somewhere pretty close to the money. That was my first time ever getting executed, and that was like a year ago. I was like, what? Because that's when, and I did it in Robinhood, and it doesn't always show your account correct. It'll just show that you're negative. You know, hey, you're negative 100,000 here just for the moment, and you owe us money. When did I first start investing in the stock market? Well, probably when I was, I guess, 18 or 19, and I had my first 401k plan. I think I can't remember how old I was, or probably 20 until I had 401k. So that's usually everybody's first time. Well, I guess when you're a little bit older, when you're younger, you probably have Robinhood when you're 12 now. But so that, and then individual stocks, 4 or 5 years or so. But when everything shut down for the pandemic, I didn't have, my company shut down, and you know, you couldn't go shopping, you couldn't do anything. So that's when I really dove into everything. First, it sounded like a foreign language to me, and then just became more and more comfortable as time went on. And now all the language makes sense, which is pretty cool. What happens, let's say you have a put spread on Tesla, roll out before it's in the money. It goes in the money under both of my strikes. Would I be at max loss? So, no, you wouldn't be at max loss if you still have time. So there's basically just two components, and you can watch, I have a video that's on intrinsic and extrinsic value. There's always just going to be value in time, no matter what, almost no matter what. That's why even if you buy a call, you know, let's say you buy a call on the SPY, if they allow it, you know, for $1,000 expiring in one day, the only little bit of time that you have, and there's possibilities, right? We know it's like pretty impossible for it to go 1,000, but because there is, and then there's time, you know, that thing will at least cost you $1. You can buy one, and then you'll start seeing things getting to $2. So as long as you have time, because it's both those factors, you have time and you're somewhere relatively decent in close to the underlying price. As long as you're there and it looks like there's potential, and we've seen Tesla move $100 in a day, so there's always that potential, right? Somebody wants to YOLO a few dollars. So even if it's in the money, I've probably done some the last couple of weeks. I know I've done them that are in the money. If they're super far down, if you had like a 1,195 put debit spread or put credit spread, and Tesla's down at 400, yeah, you might not be getting back there. But yeah, you should be able to always roll something out, as long as you're not waiting too long. Like right now, if you still had a 850 or something, you'd have a super hard time of that. What do I think of Planeteer Leaps? I love them. I want some more. I've committed 100, I think $100 a day. I'm buying. I want more. I'll probably sell some puts on it. Leaps are not a bad idea. I think it's going to be a long time. I think that stock is something we're super happy we bought today, or even during the rest of this year, 2, 3, 4 years down the road. Hey, Steven, are you done? Are you done with school? Like for that trip? I'm gonna wait a few weeks, so just in case we don't sell off in mid-March, but I'm planning to buy some long-term Planeteer and Neo soon. Yeah, I like Planeteer. That's gonna be I think that'll be my second biggest holding next to Tesla. I don't want any Neo at all. When you get assigned, do you hold the stock and sell covered calls, or you just immediately sell the stock. Assigned on a put credit spread, that all happens like automatically. That's like past expiration, or if something gets executed on, then your brokerage would handle the rest, like boom. But like yeah, if you're selling cover calls, yeah, it's just gone. Unless you the other thing is you could call your brokerage too if you just wanted to buy stock and sell it. I don't know why you do that though. I see 80 bucks. I don't know why I can never say the name Palantir. I have to look at it. But I do too. Like once I started looking, actually reading their website and looking into exactly what they do, and realizing from just like my experience how much that would mean to me from so many aspects. There's so many stupid things that that companies have in place, and they have it too many different places. And Palantir taking that's going to be awesome. I mean, it's got to be bigger than Zoom, and Zoom we just video call on. What happens if you are in the money on your put credit spread, but your expiration is 6 months out? Yeah, you'll definitely still be able to move that out, because that 6 months worth of time is worth a lot. Is this my main source of income? Nope. How often do I take money out from your account? So no, it is not my main source. My main source is a regular job. Although I made more this year doing this than I did at my regular job. But I still do take money out. So I think I have like I want to say like $50-some thousand that I've pulled out of the account now. So I believe for all this, all the stress we go through and everything, just keep getting myself paid. 5 likes and 18 up. Yeah. Oh. Yeah, 18 people and only 5 likes. I'm going to be depressed. No, I'm super happy. It's I think me and Steven may have been the only ones here during the first time I did this. Okay, so not until March 26th. So on a covered call, say the stock price goes above your strike. So what is Robinhood? So you sold the call on the shares, right? Well, why does it show negative? Because, okay, yeah, good question. So that is the price right now of that option. So you're already covered by your calls. So you're not losing that whole amount because you sold it, right? It's not like you're forced to buy it back. Think of it that way. That means like as opposed to you have boy, how do I explain that? As opposed to you have not had sold that, right? Like at this current price, when the price goes up, like now you could get more for that same call if you would have sold it today or next week or whatever. You would have gotten more. So basically what happened is the stock moved against you, but the maximum, you're right. So you've already set the limit. A $55 call sold on something is just going to sell your stock at that price. It's silly and it shouldn't. And I have no idea how at the end Robinhood actually calculates that. But technically you are down that, Stephen, where you're down the money is the fact that your shares are worth so much more now than that call. So you've effectively lost that money, right? You're going to have to sell whatever it is, like a $60 call or $60 stock for like $40. So that's an extra $4,000 right there. But if you were to calculate it from that time when you just had the shares at whatever price, that's the initial calculation. Yeah, I saw you asked that for somebody earlier. I'm sorry I didn't answer that. Like I saw it in a chat or Discord or something. I found out about your channel. What I like about your channel is I'm a regular guy, talking like a regular dude. to get honest on stocks. Yeah. Thanks. Yeah, it's just the ones that I personally like. I actually really hate all the stuff where somebody does like 2 minutes worth of research or watches 2 videos and they're like, this stock at 5x. I was wondering what happened. There's a guy who I don't think he streamed, but he just kind of did like me. Here's my portfolio, and I saw some of his stuff. They were just like just stupid calls. Like in my opinion, like a lot of penny stocks, and the guy like went up from like 100 grand to 300 grand down to 100. I think like 100 back up. But then he's from Texas, and I saw like his last post. He was like, "Oh, my power is going out and everything," but he was at an account deficit when he was at 300 a few days ago. It's terrible. It's like that's probably what's gonna happen. Market gains? No, it's like sharp. Yeah, Sharp and Mild was the guy that I watched. But I think he probably like negative that account. Like the last thing I was like looking at what he had, and he had stuff that all went tumbling down. He was already at account deficit, and whatchamacallit? Yeah. There's no way he didn't go there, so he just like stopped posting. I hope he gets power back and salvage something, but that's scary. All right, let's see, where are we at? Are you familiar with Aphria and Tilray? Yes. I got some calls for Tilray in March that I'm banking on. Yeah, like I know they're both weed ones. One of my really good friends, that's literally all he's been doing for the last 6 months or something like that, is he was like playing the wheel on Aphria, and he just keeps selling calls on it, and that's all he's done. Tilray, I actually had some of that like pre-merger. I think it was just like a short-term play. So I know those are weed companies, but I just don't know very much about weed companies. Like I have done zero research. I kind of know what they do, and the big thing that boggles my mind is how is one company going to innovate better or do something better than the others? Like I know maybe there's like craft weed or something, kind of like craft beer. That one I know. But when I was asking one of my friends, like, what do you look for when you're shopping for weed at the weed store? And I'm from Seattle, so it's all legal here. And I was wondering, like, what's the differentiator? Is there like good marketing out there? Does one affect them differently? And he's just said, well, it's whatever has the cheapest price. Like I go to this one, I go next door. And I'm thinking that just sounds like lower prices to me, not anything like going up. But maybe with the new administration, maybe it's supposed to be legalized way more places. I don't know, or maybe federally. I just heard my state just effectively legalized drugs, so that's super awesome. So I wouldn't be worried about getting exercise even if you are in the money and 6 months out. No, because that call, whatever you have there, that time is worth somebody else. So the one that you bought, right, that's the one that you can exercise. But if you bought it, you still have so much money there in time, and that's your belief that you wouldn't exercise yours. So there's nobody on the other side of that trade, the one that you sold, the put that you sold, that would trigger them to be able to want to exercise it at that point. So no, not at all. Especially puts. Thoughts on NEO? Bought some calls. I don't like NEO. So they keep. It's kind of funny because everybody keeps calling it the Tesla of China, but Tesla's in Tesla, so isn't Tesla the Tesla of China? I don't understand what their leg up is supposed to be, or why they're supposed to be anything better. I mean, I don't think we've ever had like any Chinese vehicles over here. I don't know if the CCP is going to force people to buy the vehicles manufactured by them, but I guess Tesla's manufactured in China now. I'm actually short NIO. Have been for a while. Their market cap in comparison to Tesla, because that's what we have as far as a very successful, which is already very successful. Most people, if you're thinking about buying an electric vehicle, like what is it? It's probably a Tesla. It might be like there's a couple people who probably want the Porsche or the what's the other one, that the Ford Mach-E. I haven't even paid attention or heard anything about that recently, but 99% of people, that's what they want. When I drive down the road, that's what they want. And Tesla is getting just more and more ridiculously efficient with all their processes, with their vertical integration, and their mission is to make it cheaper and cheaper and cheaper. When we have the $25,000 car and you get a $7,500 federal tax credit, so that thing is under 20 grand, like why all of a sudden would you just want a Chinese car? So I don't see them going anywhere crazy. I mean, Tesla's already has the better batteries, and they have what's the other thing? I don't remember off the top of my head, but yeah, that's why I just don't see it. Oh, they have solar. They have solar, the whole energy side of things too. And for NIO to be, I think, like 1/10, maybe a little bit more of their market cap doesn't make sense to me. Same thing with whatchamacallit now, Lucid. I'm more skeptical on them. I'm probably gonna sell my shares, the CCIV. I don't like it. Some of that big lie right in the beginning. The more I thought about it, the more I researched it, I didn't like it. Tilray has a 25 to 30% stake in TerraSend, which I don't know. They're safe in the news. It'll lift U.S. cannabis prices. Oh, so if like all the weed goes up, and I just don't know the infrastructure. Sorry, of weed. So if all the prices go up, does that help one company or just like the entire ETF, something like that? I just don't know. What would you do if you were diamond handing some March expiring Tesla spreads on the low 660s? Well, if I was diamond handing, then I can't sell. I'm fine with that. These last couple of days, I'm still okay. I'd hold my 600s, low 600s. Solar panels, yes. Solar panels, solar, those giant, huge batteries. TerraSend has an earnings call March 23rd. What is the outlook? Like, why are the weed stocks going crazy? Is it because of the administration in place? Are we going to legalize it everywhere? I know the weed sectors have been all crazy and everybody's super into them, and I literally know nothing. It's just not interesting as technology, I think, to me. Lucid reminds me of Nikola buying and waiting for products. I know. Nikola, that one was too obvious. That was too obvious. I still can't believe it's around. But the thing was, the entire time, I was so sure it was a fraud. But the entire time, puts were ridiculously expensive. Because it's like, you know they're going to go down, just weren't sure when. I mean, they would have told, that last company, I can't remember the, gosh, what was her name? The one that was going to put like a patch on you, monitor all your health, and inject you with whatever you need. Diamond hands can't sell, right? But if I was scared hands, if I was iron or paper, I'd roll them out. Like, the big thing I want to do is be comfortable and really not have to worry day by day. So if I was worried about those at all, I would move them out. I would move those out a little bit already, honestly, like 660, 650, just in case, and you only have what, another week or something. March expiring, so I guess that's monthly, so the 19th. Oh, yeah, maybe I'll wait another week, for sure. Safe banking will be a big catalyst, and I think they're going to try to get federal legalization this year. But even if it's... Okay, so that still doesn't change anything for us, does it? So... Oh, the safe banking, okay. I wonder if that makes things... If that's going to make things less expensive, though, because, like, as soon as you can do some more things legitimately, I don't know if that actually funnels more into taxes and fees and everything. That could be good. But the federal legalization, I wonder what that changes, because, like, in Washington, well, my state, it's legal here, and nobody cares that it's federal illegal, except for, like you said, the banks. So I'm not sure what that's going to mean. Or once it's federally legal, states can still have it illegal, would think, but not an expert there either. Probably everybody is right now because of the stocks. Am I selling weekly put credit spreads? Yeah. Once in a while, so generally I like to sell them 4 to 6 weeks out so I have time to manage them. So I had things like at 750 that I was able to move out and down below 700 now and get paid for it. But I do have some expiring, I think, like next week, and I bought them like down in the 400s. I was just like, I want my money to do something. I'll put them down in the 400s. Why not? It was like a 90-some% probability of profit, like one Tesla was dropping. Weed market too unstable at the moment. Need more regulations freeing it. Yeah, man. I mean, I guess your name being Show Me Hydroponics. you might know something. Yeah. Oh yeah, I just saw that. Totally. Yeah, I just don't get it, like, at all. Since it's legal in Washington, I don't even know. Is it cheaper in the stores? Is it cheaper on are the other channels still there? Are people still bringing it in illegally, or is everybody now going to the store? I couldn't even tell you that much. I was wondering if you can explain the ratio when rolling. Put debit spreads. Like I had 2 contracts and I'm rolling them down 5%, 1 to 2 months out. Oh, like how far out? Well, those are put debit spreads instead of a credit spreads. Debit spread, yeah, those can be super expensive to move them out. But if you're talking about a put credit spread, I don't use any specific ratio, and it's going to depend at that time a lot on volatility. That'll change. Okay, yeah. So it'll change quite a bit, just depending on volatility and where exactly that underlying is. So like if you're trying to move something out and you see it's on the way up, you may be able to do it a little bit quicker. But there's not going to be a fixed place I want to move it, or how far out. So like those 750s, I wanted to move out to 700 or below initially, so I just rolled them out as far as I needed to collect a little bit more money and not take a loss on them. Hope the market pops on Monday. This up and down sucks. I know. I don't even need it to pop. I could just use a little horizontal for a little while. That'd be good with me. Changes everything when the government passes banking and takes it off the schedule. Oh, like schedule whatever class narcotics. Yeah, I guess that'll be big. So okay. So my other thing is like, why is there, so, okay, let me see. Missouri, no one wants to pay $400 for mid-grade, $300 for the ounce, and $100 for taxes. So much cheaper when you grow your own. So is it cheaper when you grow your own? Like, when it's all legal, most people will have it in their garden, like they grow the rest of their herbs? Is that what you're saying? Yeah, I don't even know what really the grade. So I guess that means just whether or not it is good weed. And the other thing I was wondering about the market. So now somebody who does not want to smoke weed because it's legal, they will not smoke weed. Like, that wouldn't be a deciding factor for me. If I wanted to, I would. So that's the other thing I'm just curious about with all this. Or like you say, if it's super legal, why don't you just grow in your backyard? Why are you going to the store at all? Once they're OTC, over the counter. Yeah, we'll see, I guess. What happens, like, is like Marlboro or somebody, like Altria, gonna grab a weed company, and then you just go to the store and buy like a pack of cigarettes? You can just buy like a pack of joints as soon as all this is super legal. I'm new to options trading. What resources would you recommend to learn? What is the best way to learn? Depends how you learn. I learn like trial by fire. I'll just jump into something and try it. Like these live streams that I just started doing whatever a few weeks ago, and it was just me and Steven, I think, for a little while. I had no idea how they were going to go. So anyways, best resources, probably I think the best technical stuff is all Tastyworks. Like, they break it down and they won't misguide you. Like, here I show what my strategy is. Am I saying it's the best strategy? Nope. Is everything at risk? Yes. Because it worked for me and it's working for me, does that make it right? Nope, it absolutely doesn't. But like Tastyworks, I think I don't really see much better. There's a couple of guys that used to work on there that have their own things now, who might say things a little bit different. But normally, 99% of what they have to say is all like technically true. So if you want to know the correct way as far as like dates or strikes to pick on a put credit spread, go watch those guys. Me, no. But those are all like general rules. Like, it's a high IV environment right now, and like historically and technically, it is a bad time to sell put credit spreads. It just is. And I love, boy, I just love the book. The Richest Man in Babylon. That was really good. I've read several suggested books, and that's my favorite one. Just, it's not options specifically, but it is just money and kind of like wealth in general, which is pretty good. All right. You're a disabled vet. Thank you for your service with PTSD, so I have authorization to grow my own. That's good. At least they're doing that. So my question is to you then: did before you were authorized to do it? Did you do it anyways, or you bought it anyways? I kind of assume so. How far of the money do you look for when selling puts? Probability and delta. I don't use those for the most part. I don't use either one of those. I look at like price action and the underlying, just the history of it, what's going on in the market. I use that. I don't use anything exact at all. And that's something like, if you were to look at Tastyworks, they'll probably tell you exact, like, dead nuts, here's the best probability of you making money. When the feds reschedule marijuana and set up banking rules, you better hope you're on the right side, on the right stick. Crazy. What's a worst case scenario with put credit spread? So it depends, like, how far. Like, the worst case scenario is that you lose your collateral. That's the worst case. So whatever you opened it up for, it'll just be the collateral minus the credit received when you opened it. So it's a $500 spread. You got $100. Worst case is you lose 400 of it. But if you keep rolling them out, unless the stock like never comes back up, then that's the only way you can really ultimately lose on it, which I'm not saying cannot happen. It's just, in my mind, it's super unlikely. You definitely can't. Yeah, let's see. Like, what protection do you have for a 100+ drop overnight? I still have so much time on mine. Anything that's that far out, I'll keep rolling on. And that's why that specific company is the one I do it on, because it has this crazy crazy volatility. We get to collect good premium, and two, I have a ton of faith in them, and I don't see most of their potential being realized. So even if it's a year, 2 years that I have to keep rolling, I honestly, I don't care. I still have money into long term, short term. I still have like plenty of money to play with in the meantime. I'm not trying to get rich next week, next month. This is totally a marathon for me. When is it too late to roll put credit spread? When it costs more money than you're willing to spend to roll it out. Like, at some point, $1,000 put credit spread, if the stock is down at 400, you'd have to look at what that costs to roll it out. But in my mind, I would rather spend $50 to roll something out to protect my 500 like any day. I don't understand not, unless for some reason you think the market has changed, like everything has changed and that stock is never coming back. And I don't believe it. Like, maybe I'll just get hit with complete stupid tax one day, and everything will drop to 100, and I'm just an idiot. But oh well, it could happen. But I'm investing based on my beliefs. My father is a Vietnam vet, so what it did for him. Oh, okay. I am not a vet, but I have been to Vietnam. Beautiful country. What's the worst case scenario? Be a freak show, go haywire after hours, causing... Oh, man. What's the worst case? Like, somebody on the other side, like... I guess so. Worst case scenario is Bitcoin totally takes over and every single dollar that you have in that account that you made is worth zero, and everybody just agrees that crypto is the new standard. That's the worst case scenario. What technical indicators do I prefer? None. Previous day, like previous day, previous month close. Like, I just like looking at the price action and the history. I'll use the RSI. I'll use it, but just as a guide, I have the S&P overlaid on top of Tesla. I just want to see if there's when there's any convergence or divergence happening, or correlation or divergence happening. So I just have that overlaid, but not much other than that. The most important indicator for me might be a piece of news. Poke that like button and listen for the Pillsbury Doughboy sound. Oh, do you do many weekly option plays? Not for... No, I don't do a ton. I can't say I don't do none. So I did play Workhorse. Like, after that dropped, I bought these cheap calls. They went up to a couple bucks, like with that little pop that we had. I think it was right before Thursday or Friday close. Thankfully, I happened to be looking at it at the time, so I was able to take profit on those. But every once in a while, but it's like literally just for fun. It's such small amounts and not where the bulk of my money goes. The bulk of my money goes to put credit spreads and then either back into equity or just into equity. What's your opinion on people not recommending to trade weekly put credit spreads? A lot of YouTube videos I've watched have said monthlies are better, so you have more time to adjust the position. So that's, Griffin, that is 100%. That's what I agree with. I don't like doing weeklies. 4 to 6 weeks out is what I do, because you still, that's exactly why I say that. You have more time to adjust the position. I rarely have anything 5 days per 5 days until expiration. Once in a while some 12 days, but I'm usually managing them before then. Yeah, so I agree with that. And I think technically, like, just higher probability of profit, I believe that's correct, like technically correct. And I think I probably learned that from Tastyworks when they were doing back testing on that. But I 100% agree with it. That if I had not been opening stuff far out and I hadn't been rolling them early, I would not be in a good spot. Too late. Yeah. Let me see. Move this guy out of the way. I wanted to look at 4 to 6 weeks out sweet spot. I believe. Don't take my word for it, but I mean, you can look it up. Tastyworks, you can 100% find it. I'm 90 some percent sure. I believe that is like technically correct, but I like it. That's also when you really start to see theta to decay. So you can hold it for 3 months up and then start dealing with it a month and a half before, but you really don't make anything in that on those farther out ones. So like for me, the ones I rolled out, I'm not going to be able to get that money back as quickly. Like if I had just rolled them out 2 weeks or 3 weeks and those ran up to my expiration, the theta is going to decay a lot faster. So even if we go up to 800, the ones that I have far out that are like 700, 690, I'll still have to wait quite a while. Or I could move them. But yeah, that's totally why I love it. What was the other things? My other thoughts, just while I was sitting here, about this whole Lucid thing is, do you see some of their cars were like 160,000? I was thinking, I wonder if people in this price range, like, just give me a Mercedes. Why do I want a Lucid? I have no idea what that thought is, and I'm sure these guys, like with Volkswagen pushing so much, they're gonna have their electric vehicles out pretty soon. They can't not do it forever, and they're not even going to be allowed. I think my state just made the decision to not have. You cannot register a new gas car in the state of Washington in 2030, so that's not very far. Steve Butler, how often do I monitor put credit spreads? So generally, once in a while, like I just look at my phone and I kind of know my positions like pretty much all day. I do some on Tastyworks, and those are super far, like stupid out of the money, and I mess with those like every week, sometimes twice a week, and sometimes every other week. But like they're way far out and way far down, and it was just something I wanted to just trying something out there. So barely at all. This last 2 weeks, holy smokes, man! How many times did I check on them? Oh, 300 times a day. Like literally, I think in some of the chats we were just like watching every single tick. Nope, it's holding 685. Nope, 684. And then everybody's calling out all their different theses. Like, oh, I see support here, support here, support here. And then we'll watch it butter through support. So I've been watching them a lot the last couple weeks. Used to just be able to go to work and check at the end of the day. And then also like when it's dropping, or when it's dropped, I feel obligated, like, because I don't want to just like put out all the good times. Be like, yeah, look at me win, win, win. As soon as it drops, I feel like, hey, I need to say it's dropping. Just not trying to be hide all that all the bad days or down days, whatever you want to call them. I think a lot of smaller EV companies will get crushed because of the adoption from the big guys. I think so too. That's right. But man, like I thought on the initial Lucid presentation, I was like, okay, well at least they're not trying to go like compete with the Model 3 or the Model Y. Like it's pretty smart because like I said, the S doesn't feel like just super luxury like a luxury car does. It's totally different. And but yeah, any smaller guys that aren't hitting like some niche, like why are the battery companies even going to want to sell to them when they have a chance to sell to the big guys and just secure contracts in bulk? It's going to be hard. Would I recommend waiting until near expiration to close the position? So I don't like to wait until. See, that's the thing. So 4 to 6 weeks out, I'm usually, like, if they're anywhere close, I'm moving those, like, 2 weeks till expiration. Because, like, over the last 2 weeks, those could move against you very quickly. Oh, there's Steven coming through. 45 days out. That's, like, technically. Okay. So, like, that's probably technically, like, the right way to do it, right? 45 days out opening. And manage at 22. So like they don't have anything with less than 22 days till expiration, which is kind of funny because that's where, yeah, that's where it feels like really comfortable too. So I manage at 12 days. Well, I guess 12 days maximum, but minimum, I don't really have a minimum. So I guess I was managing about 30, no, that's about, oh, I guess about 20 some days out, like the ones that were expiring 3/19. Look to close at 50%. Yeah. And those guys have just a ton of experience. And Steven, do they when you say manage them at 22 days, is that when they're rolling or closing or doing whatever? Or do they sometimes let something else happen? $170 delta. Yeah. Everything that Steven's writing is probably going to be the technically correct thing to do since that's what Tastyworks does. Would you recommend waiting until near expiration to close the position? No. Or set up an order to close once you have a certain percentage profit from the margin. You're welcome for the Q&As. Thank you for being here. It makes it way more interesting to talk to more than myself or just a couple people. So thank you. Thanks for subscribing too. That's super awesome. Yeah, I think hit 1,000 yesterday, and it's all Steven's fault. Thanks, Steven. And then as far as percentage, I was looking for the spreads to be under about 20 cents worth of value, but of course that's while everything was on its way up. Right now I'm just mainly rolling out and opening some stuff with like a 90% probability of profit. So definitely have gone into a different mode than we've been able to go into over the last several months with everything just on its way up. So does the close at 50% mean closing the position at 50% profit from the margin? Yeah. Okay. Yeah, the premium. So if you opened it up for $120, it automatically closes when it only costs $60 to close it. And in Tastyworks, you can set it. I guess, I don't know if you can you auto close in Robinhood? I don't even know. Like Tastyworks, it's actually just really nice. You just select the percentage and you go. Tastyworks is easy, but oh, you can do it on Robinhood. It's easy like when you to do a bunch of functions, but it's not easy if you compare it to Robinhood at all. What do I think the best strategy is to start with in order to build a 5K smaller account? Like you're starting with 5K. Best strategy, start small paper trade. Do what you're doing now, ask questions, get educated, and then decide what you want to do. I mean, selling is going to be an optimum strategy because you're playing the casino, you're not playing the gambler. And I guess it depends on your risk tolerance too. So like safest would be selling naked or selling cash covered puts. Find a $50 stock and sell a put on it. That way, on a stock that you want to own, and start up playing the wheel strategy. That's the safest. That way, if you lose, you're not really losing too. That's basically 100% win. Then you sell calls on the other side. But it depends like what you want to do. Like, do you want to spend a ton of time learning? Do you want to spend like every day managing the positions? What's your risk tolerance? Are you okay losing 2,500 of that 5,000? Do you just want to grow? Like, there's so many. That's actually, I think, the coolest thing just about the market in general. There's a tool for everything. How did I learn to trade options? I learned to trade options thanks to the pandemic because I was shut down and there was absolutely nothing to do, and I didn't want to spend all my time on Netflix. And as far as resources, like I said, Tastyworks is fantastic. I think if you have to learn from someone, but also I think their stuff is difficult to listen to. So just look it up, find somebody that resonates with you on YouTube and explains things in a way that makes sense. You don't want to hear that buying a call is for the stock going up. Stay away from channels that say, hey, this stock can 10x in the next 20 minutes. Stay away from that stuff and you'll be okay. I enjoy talking about this stuff. That's why I do. Yeah, and a lot of people do. Tastyworks guys are great, but you'll need some fundamentals like Investopedia is fantastic just to read about. Plenty of videos. And then figure out which strategy you like and why. I want to chart back up instead of that. Tired of looking at the Mercedes. It's funny, after getting my Tesla, I was like, yeah, I don't want any other car. Important for this week for the markets to be green. Yes, or sideways. Green is sideways for me, though. When a Tesla dropped to 450, how would you even roll those out since you just... Well, I would wait, because when I roll them out, like, and there's more extrinsic value there, I can still wait. Like 6 months from now, like if it went down to 450 or 400 and just stayed there, something wouldn't make sense about that. Tesla staying anywhere, like it's either going to go to $10 or $1,000, one of those two. I feel like in the next few months, but if it went down to 450 and just like stayed there, yeah, I'd pretty much lose. Like, really? Because then I'm not even able to gain that much. Like, it takes an entire year for me to eat up that time and then roll it out again. How large of an account would it take to will $250 a week fairly consistently? Depends on the stock. Like, so you just have to go and find something that you can sell $250 worth of premium in a comfortable spot for you. What did my buddy start with? I can't even remember. I'm not sure if he even started with 25,000. I think it was like 15,000, and he's made at least that. You probably $5,000. I don't know. Would you recommend a newbie to try and make a ton of small trades? No. One each being a small percentage of the portfolio. The more trades you make should mean that you have a higher probability. No, it's not really how probability works. So you basically would just add them together and divide by 2. I think the less trades, the better. I mean, paper trade all you want. Paper trade a million trades. But generally, the less trades, the better. When you try to move and adjust things, that's generally when you're going to lose out. Plus, then you have slippage too, which is just the difference between buy and ask for whenever you're making a move or paying commission. But yeah, I would recommend small trades in the beginning, though. Like, there's no reason to risk. Don't want to risk anything more than you're comfortable with, and you don't want to risk more than you're willing. Like, you don't want to risk more than you're willing to lose. But the hard part, I'll tell you this, is going to be, like, if you have a $5,000 account and I tell you to risk $10, okay, you risk $10 and all of a sudden you made $50 on the account. That's going to be the worst thing that ever happens to you, because you just $500 extra money, and then you're pissed at yourself because you didn't do it on the whole. You didn't do 1,000 to 5,000, and yeah, and then you're just gonna like jump in with more money. Oh man, see, if I just would have used all this money, I would have been rich by now. It's hard, but if you literally can make a commitment to start small and go, I'm gonna risk $20 per play until I'm totally comfortable with it, I think that would be ideal. I think market going green this week because stimmy money. Yeah, but I don't know how long is that gonna take before the Senate's going to see it or anything. I don't know. Yeah, no, but stimmy money's always good. I'm just concerned about making so many trades and not fully understand what I did right and wrong. Yeah. And that's kind of like was my approach, right? I was just like, well, I started the account with $500. I'll just, if something goes wrong, oh well, I'll just I'll lose out and we'll start again. But it's almost like you really need feedback, or hopefully you can look back and see like what the mistake was. I was able to do that. What does ratio mean on Robinhood? Which one? There's a, let me see, does it show it here? Ratio. Is it? I don't know where it's at. Which ratio though? There's oh, is it when you're opening or closing spreads? There's like ratios of puts to, or the different options. What percentage of a 5K account would be good to dedicate to a single options position? I've got a good rift home with no yellows. Oh, if you're going to do a cash secured put, as long all you have to do a cash secured put, do it on a stock that you would like, and you could do the whole 5K. Do half of it. You're just gonna have to just find a $25 under stock. Then you're fine. You're win-win either way. Make sure it's a stock you want to own. So if it goes down, you're happy to own 100 shares of it. And if it goes up, you keep your collateral. It's win-win-win. Oh, okay, yeah. So what does ratio mean in Robinhood when you're rolling? It says ratio in the corner. Yes, in the spread. So let's see. Is that? Let me see. Let me get an option up. I'll show you. Get this guy zoomed in. Okay. So let me see. Does it say it here? Okay, so see if it's okay. So on the mobile, I think it does just say ratio, because I'll do this once in a while. So what I'll do when you'll see ratio on mine, usually what I'm trying to do is here, let's see an actual example here. Do we have any for April Fool's Day? Oh, it must be on puts. No April Fool's Days. Oh, here's one. Okay. So, hey, here's an in the money. So I can probably do these Monday or Tuesday, but March 26th, I'm still these are the last ones sitting there. I moved 22 of them out. Last 7 here. So, all right. On the mobile app, it's going to look a little bit different. But let's say right now I have a 700 and 690, so that's $1,000 or a $10 spread, right? And let's say I wanted to take these 7 and open up 14 spreads, but just $5 wide. So this will be, I'll have to trade in one of these for every 2 of the $5 ones that I want to do. So you'll do that. It'll be a little bit different in mobile, but so we'll take these 700 690s and we'll roll them out to, how about March? Holy crap. Okay, we'll roll them out that far. Let's go. Okay, May 21st, we have some $5. Yes. Okay, so I want to take these, not 605. So I want to take these March 26th at $10 a piece, and I want to move them to $5 spreads. So let's say I want to move them to 700, or 705 700s. So I would sell the 705, buy the 700, and then click up there. And there's normal ratios, just 1-to-1, and then custom, you set a unique one. So I look at the ones that I am opening at just $5 apart instead of 10. We just want 2 of those. Make sure that's right. Yeah. Okay. So this is correct. So this is the same thing that it does on the mobile, but basically you're 2-to-1 here because every single one of these that I get rid of, I'm able to open up 2 of these. So that way I'm rolling all the collateral over. So that's handy, like when you go from a date, like if you go from weeklies to monthlies or even yearlies. Some of them don't have the same strike prices available, so you might need to take a $5 spread or like $5 spreads and put it into a $25 spread. And I'll definitely do that every once in a while. I have actually several times, and people are like, "What is it? Why are you doing that?" And I gloss over it every single time because it's just not that important. Or I guess not because it's just not that important. It's just because I've done it so many different times and just think, oh, everybody must know this one by now. What screen am I looking for? Oh, this one. Cool. All right. Any other questions we got? Let me get my. I wish this thing would stick on top of everything. That'd be nice. All right. When you roll position, how do you determine an ideal time to sell at a profit? Are you saying like once you've rolled it, then what am I looking to do with it? Oh, am I like way over here? No. Do you use any stock screeners to look for good stocks to sell puts on? No. I've every once in a while, the main reason I will sell a put is just because there's a stock that I like. So I'll sell them on AT&T, never expecting to get exercise because it barely moves and I barely make any money off of it. Or if I see something that I just would like to buy some more of, and I'm just fine with it. Either I collect a couple $100 or I buy the stock at $10. Like either one is fine with me. And if it goes one way, I own the stock, and if it goes the other way, then I collected some more money from my account. But I'm not going to screen and just do random ones on stocks that I don't really want to own. I did it only actually a couple times, and I think I got assigned. That's actually why I own Dave & Buster's now. I think I got assigned at $13, and maybe it's $40 now. So it all ended up pretty good. But that wasn't a stock that I carried down. But now I'm fine. I don't know. They may even pay a dividend. That'd be cool. But I have 100 shares of Dave & Buster's, and I've never ever been to one, so that's terrible. What's the downside to consistently rolling out spreads? If there's not much left in it, not much, you could potentially have to spend some money if the stock never goes up or doesn't trade sideways. If there was a lot of collateral left in it, let's say there's half the collateral left in it, and you just closed it, then you could potentially make more money with that collateral, so a risk of opportunity there. Why is it when I watch some other live streamers, they're really careful to not show their positions? I don't know. Why do people, when they advertise their car on Craigslist, put their thumb over the license plate? Like, what am I going to do with your license plate number? I always wonder that too. Yeah, I don't know why. I don't know why you wouldn't want to just show somebody, but I mean, that's why I wanted to do it in the first place. Why I started this whole thing was literally, I got excited about it. I was trying to tell like coworkers and people I knew about it, and nobody wanted to talk about it. And then, hey, I could post some stuff on the internet, and then all of a sudden I got people to talk to about it and show it off and ask questions, because I love educating about it. I wish I had more time to do it. If I ever don't have a full-time job, then we could just like jump in Zoom calls or whatever and talk about any specifics we want to. Because they're not doing it for real? Yeah, maybe not. I don't know. I know some people only want to talk about the good days too. Maybe not. They don't want to talk about the bad days. Why don't more people sell options? I don't know. Great question. I don't know. Selling puts, it's just a winner. Especially when you can do it in an IRA now. It's nuts. But that's the right side of the casino. You know probably why they don't? Why they don't do it is because you don't make money super fast. Like, you could buy, when you get into options, you could buy a YOLO call, and you can turn $500 into $50,000. You are never ever going to do something so crazy like that by selling puts. Like, you're just not. You're going to make money consistently and slowly, more than you would probably just buying the SPY or something like that. But those other options are tempting, you know, especially when a lot of people just jumped in the market this last year, and I mean that's when I got heavy into it too. But we've been seeing all this craziness, and we've been seeing the Wall Street bets, we've seen AMC, we've seen GME, and we're just like, oh, what if? Maybe it's like playing the lotto with a lotto ticket or something like that. Like, if you get it right, it may only be a 8% probability of profit, but when it does hit, it hits big. Are you mainly looking for high dividend paying stocks for your long term? No, actually, I have more money in growth still, but I have some that I played with. So I have mainly a growth portfolio. I do have a dividend one, but I wish I never would have opened it, because really there's no reason to. Maybe like when I'm actually retired and just need income, I may switch to more of that type of portfolio. But it's like where my growth one is doubled or tripled or something like that. I can't. Let me see actually how much it is. But it's gone like way up compared to my growth one. But I do hold in my Robinhood account. You'll see AT&T and you'll see Coca-Cola. The reason those two are in there, they're just like a checking account. Instead of me just having it in cash doing nothing, I will just have a few hundred shares. That's my savings account. Or I guess savings account with 7% interest. Those couple hundred shares of AT&T, they deposit what, $100 and some in my account every 3 months, so that's pretty cool. But I don't want just dividends, dividend payers. It's not. I have plenty of time for growth. Thank you for doing this live stream and answering much needed questions. You got it, man. You're very welcome. I'm trying to make a lot of money. Yeah, so let's see. Let's grab. Yeah, actually, it's pretty sad. So I started out with more money in one of these, but if you really want to see my holdings, this is my growth one. This takes you to M1. If you go there, this is where I hold my growth, and let's see, my dividend one. My dividend one, my long-term one actually has a decent amount of Tesla in it, and like Tesla's of course taken over all my portfolios now. Cool. Let's see. Oh, and then this one for fun. I'll share this one. All right, this one is my dividend flow pie. So this one is the dividend one. So one's all my growth, one's my dividend. The dividend one is designed to pay out almost every single day of the year, like while the markets are open, so 5 days a week unless we have holidays. And so we collected stocks like that. My thought was, like, when are you supposed to buy a stock? You're supposed to buy it when it's red, right? But most of us don't want to do that. We see stocks go up, we're like, oh, there's a good stock, let's buy it. Like, hardly ever buy on the way down. So this dividend one, what it does is it takes the dividends and it automatically tries to repopulate the pie as it's allocated percentage-wise. So if a stock is red and it has gone down, the dividends will be used to purchase that lower stock. So that's my dividend pie, the second one. The first one is just all the growth stuff that I have. So you can see there's not much dividend payers in my growth one, and some, not all 100% really growth, but yeah. And if you guys end up using M1, I think there's like, I think if you stick $1,000 in there or something, then we just get 30 or 40 bucks. Can't remember, but there you go. You see my good and bad days. So do I. Some days are pretty dang terrible, but they're all pretty good. So, like, even my Robinhood, you think about it, like, who's gonna be sympathetic? My bad days, like, this has been the worst week, the worst month, and for me to go, someone to like ask, like, how did you do? Oh, I started off with $500 and I made, 200 and some grand. Well, why are you so sad? Well, because I lost 60 grand in the last month, or my account value has gone down. And to be sad somehow with only making a couple hundred grand this year from 500 bucks, like, no. I'm not going to get any sympathy. And the perspective of making more than my day job, mostly like trading while I'm driving in my car, is not too terrible. It's not like I wouldn't have to dig ditches or something for it. That'd be a lot of ditches though, and I'd probably be in way better shape, honestly. So there's good. Yeah, pay it forward, man. I don't believe in a lot, but I think karma's pretty much around. I think that's the thing. At least I hope it is. Especially like that instant karma. I love that. Someone's being an idiot and then they just automatically get punished right away. Let's see. How long have we been going? Oh, I can't even tell. Holy smokes. Oh, it's been an hour and a half. I tell you what, today flew. So, let's see. Where's my... there it is. There's my live streaming. Cool. Well, guys, hour and a half. It seems to be just about right. Usually, last couple weeks, by the end of an hour and a half, I felt pretty tired out. But today, I felt pretty good. So I think it's just getting a lot more people in here. Questions are super awesome. They help me keep it interesting. So, all right, guys. But I'm gonna get out of here. I gotta go work on moving. So bought a new house, but slowly moving things over there and getting all that ready. I'm excited to set up a new studio with an actual camera and actual mic and a dedicated place for that, and thankfully I get to spend a bunch of money on that and write it off. So that's part of the whole tax strategy deal. So, all right, guys, I'm gonna get going. Have a great day. Love you guys all. Thank you so much. See you next week.